Mahesh Patil joins us. Let's connect with him. It's been a while. We have not spoken to Mahesh. So nice to have you back. Hope all's well at your end.
Yeah, fine. Good morning.
You can't say the same for the market. All is not looking well, certainly for the mid and the small cap stocks. Is this routine profit booking or a lot of uncertainty ahead of the election?
Yeah, I think mid and small cap sector has seen kind of volatility. Actually, if you look at in the last 3 months after the first fall we saw in the market in the month of February and March, since then the overall breadth of the market has, while the index has made a new high. If you look at the mid cap index, right, it is again past its earlier peak, but the breadth has not been as strong. If you look at it, that's why if you look at an equal weight index, say around 3-4 months back, I mean that was outperforming the main indices, and that is starting to underperform. There are quite a few stocks now which are, I'd say, at least around 20% or lower from their recent peaks. So I think it has been more selective. I think the market in the last 2-3 months across the board, and more so in the small and mid cap space. And as we have seen the earnings season also come through, companies are actually reacting to that depending on how the results are, right? Where the results are good, we are seeing those companies getting very well rewarded, especially in the industrial capital goods sector, the real estate sector. But in sectors where there have been some disappointments, like in the consumer space, the stocks have also equally reacted on the other side.
All right, Mahesh, let's understand the overall outlook when it comes to the kind of mood that we're seeing in the market all in all with the elections as well. Do you believe that we are likely to see sort of a consolidation going into the next few months, or basis the election outcome, we could see a move either way for the markets that will be very directional in nature? And how do you expect the liquidity position to shape up?
Well, I think the markets, I mean, see, there are three parts to it, right? If you really analyze the market, one is on the fundamental side. Okay, on the earnings side, if you look at it, if you look at this quarter numbers which have come in, pretty much in line. Though I think there are disappointments in a few sectors, and other sectors they have been positive. Like for example, we have seen disappointments on the consumer side, on the IT sector. At the same time, we have seen positive on the financials, right, and the industrial capital good space. Even in the pharma numbers have been fairly good. So, but by and large, overall earnings growth has been okay, though it's what we've seen in the last couple of quarters, that the top line growth now is, if you remove the banking sector, right, then it is in single digit. And similar is the case for the bottom line growth. So clearly, the growth rate has moderated from what it used to be a couple of years back, okay, which recorded like earnings growth in excess of around 20% CAGR. So I think that is probably going to be the trend. I think you'll see growth slowing down, but again, clearly good visibility. The breadth is still fairly good. So I think it should continue with this current momentum on the fundamental side. We don't see any challenges. I mean, GDP growth numbers are fairly okay. Even consumption, right, which has been weak. If you look at the commentary from the consumer companies, they are still saying that they could expect some recovery in a couple of quarters. So if that catches up, along with investments led growth, which has been fairly strong, I think then we are on a fairly strong wicket on the fundamental side. On the liquidity side, though, I would say that domestic flows have been fairly strong. So we've continued to see those inflows. And I don't see anything reason why that should abate, right? It's most of it from the SIP's book. But the FI flows have been negative in the recent, and that's probably to do with the elections outcome, trying to wait and don't want that uncertainty. So if you look at overall positioning from the foreign flows, it's negative. In fact, there have been some shorting on the FNO side also. I think the short positions are at an kind of all-time high. So I think if the election outcome is favorable, I think then you're looking for much more stability on the policy front, and that's where I think FI money can come in, and that could probably take the market higher purely from a liquidity standpoint. On a fundamental level, we don't see any much change on that front. So, and sentiments, I think people are slightly skeptical. I think general sentiment is that you will see a stable government. So I think around election time, you could see some volatility, but I think by and large, the trajectory of the market will still be fairly good. And I think it should trend high. If the outcome is slightly adverse, you might see some negative reaction, but you've seen that in the past. I mean, election outcomes really don't have a lasting impact on the market beyond 3 months or so.
So Mahesh, given the current market construct, what are your biggest overweights and underweights sectorally?
So in this market, I mean, everything is like fairly priced in that sense. But if you look at from a construct perspective, we have overweight on the automobile sector, especially the two-wheelers and the four-wheeler space. We are underweight the commercial vehicle. Within the auto sector, still, while the growth rate will moderate down in this fiscal year, especially for the four-wheelers. But overall, the outlook on margin front is steady. We're seeing premiumization happening, so that should drive a better top line growth. So that's the sector where we are overweight. We are also overweight in the telecom space because we think that this is a sector which a good defensive and post-elections, there are good chances that you will see tariff increases, which have been long overdue. And that should drive better EBITDA growth for the sector. And again, the sector is likely to see a huge amount of deleveraging because the huge 5G capex, okay, which they have companies have been doing, I think that's kind of peaked out, and you see a significant debt reduction, which will drive value creation over there. Apart from that, we are positive on the industrials, especially the capital goods sector, which is actually had a fantastic run. But I think the outlook there from a, say, medium next 2, 3, 4 years looks fairly strong. So we continue to hold on to it, though the valuations there are above our comfort zone. And then sectors like pharma, for example, where even the US generics market is now showing signs of improvement. We are seeing the pricing pressure, which was there, is now eased off. Some consolidation happening there on the global side, which should be good in terms of pricing for exporters from India, and domestic markets look fairly good. And our underweights would be in consumer staples, oil and gas, I would say. And yeah, I mean, these two would be the large, and to some extent, and most of the sectors we would be neutralish.
Mahesh, why do you like autos? I mean, A, they've seen a run up. B, auto is extremely sensitive to what will happen to commodities, what will happen to disruption. Some are saying we will do EV, some are saying we will do PV, some are saying we will do both. If that was not enough, now Maruti is saying forget EV, PV, we will do hybrid. Isn't there too much of confusion as to how energy transition and how the EV space will just evolve in the near term?
No, you're right. I think there is a lot of disruption, okay, which could happen, okay, because of we both on two-wheelers as well as on the four-wheeler space. So, but I think we believe that the existing OEMs, okay, which are there, I think some of them are now kind of getting the products ready, okay, to cater to the EV value chain. And they should be able to consolidate, maintain their market share. Obviously, there'll be some disruption. And then according to this way, I think between those, okay, which companies where we see their EV strategy is pretty much in place, they have the products and the pipeline, and the companies where we would obviously want to bet on that space. While you're right, this sector has done exceptionally well in the last 1 year, but I think from here on, still, I think if you look at India's story, right, the penetration levels are still fairly low over there, and as India per capita income goes up, you will see the discretionary consumption move up, and I think a lot of users now are more aspirational. They are going in for higher end products, both in four-wheelers as well as in two-wheelers. So, that premiumization story is still playing out, which will drive better margin profile for the companies, is what we think. Again, we are not looking at a big in the market itself. We are not looking at a very big work set. We're looking at companies where their visibility is fairly decent. That's what our thesis is in terms of being positive on any particular sector.
All right, Mahesh, appreciate your time and thank you for joining us. Now,
If you like this video, then like, share and subscribe to ET Now.